Hello, you are watching a series of interviews on the AFC activities. And today we are having a special guest, Mr. Yaseen Anwar. Mr. Anwar is a chairman of the Green Investment Principles. Mr. Anwar, welcome to our studio. We are glad to have you here. And our first question will be based on your background. Given your extensive background in international banking and as a former governor of the State Bank of Pakistan, how do you assess the current state of sustainable financing in Central Asia? What are the region's primary challenges and opportunities?
Thank you very much, first of all, for inviting me to this important podcast. I'm delighted to be here. This is my second time in Astana, and I'm very delighted that AIFC is hosting this event because it's a very, very important event, and AIFC represents an excellent platform for launching the programs that are appropriate for the participants to expand their knowledge base as well as invest in this particular region. Kazakhstan represents obviously a very, very important focal point for the investment opportunities for sustainable finance. And Kazakhstan, along with the other Central Asian republics, have a huge opportunity to capitalize on this sustainable finance, which is necessary for not only Kazakhstan, but other countries in the region that have similar issues related to all the emerging market economies. And those common issues are, for example, conversion to alternative energy from fossil fuels. Kazakhstan, like Mongolia and others, are 90% dependent on fossil fuels, coal-fired plants, and they need to convert over the period of next few decades to carbon neutrality as embarked by the United Nations ESG standards, the SDGs that are required to be met. So it's best to start as soon as possible and convert to those policies that are commensurate with achieving those goals. And to achieve those, you have to start right away. Over the next 10, 20, 30 years, it will take a long time, and that requires infrastructure financing. And that area, of course, opens up the floodgates to a whole new avenue of questions that you would ask how to achieve that, because infrastructure is the backbone of or engine of the growth of any economy, because it generates employment, small, medium-sized enterprises, and other opportunities for the growth of that country and the betterment of the people it's concerned with. And as a former central banker, that was my main charter, was to not only have proper fiscal policy or monetary policy to achieve those end results, but also financial stability for the betterment of the public and the consumer that is obviously interested in ensuring that the inflation targets are met. Inflation is not sky high so that they can afford the living standards that they wish to achieve. Now, this is an important area, poverty alleviation, for example. Take, for example, China has eliminated over the last 30 years 750 million people out of poverty, what took the United States 200 years to achieve. So that's an example of a success story. And there are other success stories that one can talk about from country to country, but that would take a whole day of a podcast.
Yeah, I see. So it's better to start sustainability-driven campaigns as soon as possible, yeah?
Yes, it is, and AIFC is doing that, is bringing along people from all over the world who have different levels of expertise, and they're sharing that expertise, how to initiate those kinds of examples. GIP, Green Investment Principles, that you mentioned earlier, has got one of those objectives. And as a result of those objectives that were set out about 2.5, 3 years back, when I was asked to become the chairman of this region, we set out an ambitious goal to try and get as many applicants as possible to support this effort, this common effort, that is a global effort. And we have achieved some successes. During this time, we have achieved about 1.4, 1.6 billion in projects in Kazakhstan, and for the region alone, about 2.5 billion. So that gives you an idea from starting from scratch. We're on that trajectory. Obviously, there's a long way to go to achieve that. There are hundreds of billions of dollars that are required over the next few decades. In China alone, there's one province for transition finance to convert to this over the next decades is $2 trillion. And the global effort is a multiple of that in trillions and trillions of dollars. And how and where that's going to come from, there are ways and means of doing that. But that's where we have to go step by step and get a common ground and of understanding of policies and frameworks that enables us to capitalize on the resources that are available globally to achieve that sustainable finance goal.
Yeah, I see. So thank you very much for also telling us your point with examples like China and the US. When like comparing those, how long it took, it's quite clear now what examples to follow. Yeah. And also our next question would be, Central Asia has been experiencing rapid economic development. How do you envision sustainable finance integrating into this growth?
Good question. This is a challenging task. Kazakhstan has grown for the last 20 years at 6.2%. Central Asia has grown at a growth rate of about 5.2%. And the rest of the world globally, if you take growth rates, are at about 2.8%. So therefore, the growth rates of this region is higher. However, so why would you convert from the existing energy resources that you're using, coal-fired and so forth, to other forms, alternative energy, solar or hydro, because you're sacrificing those growth rates that might not be there for the future. However, I don't think one can conclude that. You need to convert over time, and over time you'll find the rates of the tariffs for solar or power generation from hydro a lot cheaper, and much cheaper than fossil fuels. And on top of that, you're getting a cleaner climate, cleaner environment than you would otherwise. You keep on polluting the air. And our generation, the future generations will suffer as a result of no clean air. Now, take China, for example. I cite China because it's a good example as they're leaders in this particular effort for green finance. And 10 years back, the major cities like Beijing were polluted. I don't know if you went there 10 years ago, but I did. It was polluted. Today, you go there, these major cities are all clean. They focused on that. And the three cleanest cities of the 21st century happen to be in China. That's Shenzhen, Hangzhou, and Hangzhou. These are the three cleanest cities in China and in the world. Clean air, water, no pollution, clean traffic, again, because of conversion to EVs also, electric vehicles. So that's the kind of pattern, an example that we all can learn from. Granted, Central Asian republics and Kazakhstan, like the Global South, have a long way to go because they're starting from a zero base. But to achieve that, there's always a little bit of pain that one has to endure to get something better in long term. So to convert this, you need to have this conversion to this energy areas to get a better climate, better planet for the entire population of the world. So I think that kind of growth rates may be a slight dip short term, but ultimately you'll find long-term sustainability to be present in these kinds of policy measures that need to be taken. And that's going to happen because you've got an interest rate scenario that's going to change in the coming months, coming year. The interest rates in the United States are coming down slowly. They've had a high interest rate environment. So that gives the opportunity for financing also, low-cost financing. And also investors, on the other side, need to get higher returns. They're not going to get those higher returns as the interest rates come down. So what better area to invest in other than infrastructure for long-term sustainability? And those resources, that capital, that liquidity, needs to be channeled from one area that they're investing in into another area for long-term sustainability. That can be done. It's all educating, capacity building, collaboration, and bringing out an awareness like what we're talking about now. People need to be aware that there are ways and means of doing this through collaboration. And the two largest economies, China and the United States, have the resources and the ability to do that, provided they collaborate together in every which way, so that countries in the Global South, like Central Asia, Kazakhstan, and others, benefit from what they have achieved to become the two largest economies.
Yeah, I see. Despite like being in a comfort zone economically, we need to think about future, yeah, so to focus on sustainability for for the future generations.
Absolutely. And it's important for the two largest economies to do so, because as they develop and help the Global South and the Central Asian republics, populations are going to increase. They need new markets. So if they help develop these markets, they will have new markets to sell to for their own products, and vice versa. So globalization means global trade. And that should be an effort for everybody, not the other way around, not to stymie global trade. For example, I'm against tariffs. Tariffs sort of stunt global trade. If a unipolar world exists where one country imposes tariffs, then they're stopping that trade. For example, I'll give you an example. In the 1930s, the United States imposed the Smoot-Hawley tariff, and that led to a 64% reduction in world trade.
Oh, yeah.
That doesn't help the world. And so each country should not look only at its own, but bilateral relationships and the global effort. And that's not done enough. And you don't want to use tariffs as a weapon to inflict pain on the rest of the world or any country, because it's disruptive to our supply chains. We saw one disruption take place, but not by a country, by nature. The pandemic in 2020 wasn't anybody's fault. Nature enforced us to change our lives. Supply chains. We started ordering food from restaurants. So delivery economy developed, what they call the gig economy. That never existed before. Even the United States can't identify what the gig economy represents as a proportion of the growth rates. There was one positive step that came out of the pandemic. Global emissions, carbon emissions, reduced by 17%.
Oh, yeah.
So that's an interesting positive. But then again, now it's created supply chain disruptions and created a new form of economy. Zoom calls, etc., came in. But we can't afford that kind of disruption or the global financial crisis, because that kind of a disruption pales in comparison to how the climate change over the next 20, 30 years will impact on the world. It's an existential challenge for us, a threat to us, where the planet could be suffering. So we all must work together in a collaborative effort to make sure that we achieve the same goals that the United States has embarked on. The United Nations, I should say, has embarked on.
So when worldwide problems happens like COVID, it produces new economies, new initiatives, yeah. But we cannot rely on such kind of cases to push us to move towards the sustainability. It shall be in our mindset mostly. Yeah.
Absolutely. We can't control our ultimate destiny, each one of our lives, but we can shape it. And shaping it is where we all, individuals and institutions, must work together to formulate common policies that help the global effort. One shoe size does not fit all. So we have to be able to adapt and adopt new principles. And GIP is trying to do that. Has been very successful, not only here, but other parts of the world.
Oh, that's great to hear. And so we'd like to ask you, given the levels of financial market development in Central Asia, what steps should be taken to build the necessary infrastructure for effective sustainable finance?
Okay, it's another good question. This is a question that has not been addressed in detail or specifically by anybody in most markets. At least in open forums. My own view on that is that you need to implement new policy reforms at the regulatory level. Because everybody, whether it's a financial institution or any public sector company or corporate company, stores, they must comply with regulations. So the regulatory framework needs to be structured and amended in such a way it becomes more investor-friendly and more buyer-friendly. And as a result of the global financial crisis, and I can say that as a central banker, former central banker, central banks reacted in a way that led to financial institutions' balance sheets becoming more short-term oriented in terms of financing. Riskier assets are long-term assets, and they shied away from that. The central banks need to bring out an awareness and come out with new macroprudential regulations that would encourage these banks to shift their balance sheets again to the long-term assets building for their objectives. And that also helps the shareholder value. Shareholders look at long-term returns, not short-term one-year returns. So central banks need to change their macroprudential regulations to support that. Secondly, by doing that, you get multilateral organizations like the Eurasian Development Bank, the AIIB in China, that is like the World Bank, the European Development Bank, EBRD, and others, ADB, to lend more to these countries, but they need co-financing. And co-financing cannot happen unless you change the regulatory regime from the central banks for the local lending partners. Once you get co-financing together with common regulations that everybody's happy with, because everybody wants continuity in governments, right? Everybody wants that. Governments change every few years, sometimes every year in some places, sometimes every 6 months in some places. And secondly, they want continuity in terms of security, stability, and so forth. Well, if you have co-financing with a multilateral, any government that changes will not default or change its rules and regulations to a World Bank or European Bank for Reconstruction, EBRD or EDB. They want to maintain that because they need the financing long term for their public sector projects. So you have co-financing, that becomes a marketable, a bankable project. It becomes bankable, then you attract other investors from the private sector. They're looking for risk mitigants. This is a risk mitigant. And they will come in because they know they won't default to the co-financing instrument, and they'll invest in that. And the big asset managers like Prudential Asset Management and BlackRock, which are the 2 or 3 largest in the United States and the world, they have trillions of dollars under management. They have a client base. The client base is wealthy individuals or families or billionaires, but they're looking for security. So they have trillions and trillions of dollars together. They will also be more comfortable by investing in these kinds of arrangements. And they'll become even more encouraged because today, the younger generation who are in their 30s and 40s are taking over the management of those assets from their parents who are 70s, 80s, or 90s. They're passing away. They're inheriting it. And they're more socially conscious about what happens in the world. They want clean air. They're much more conscious about the social investments. So social investments adds some fuel to the fire, meaning they're encouraged. And therefore, they're a bankable project, socially responsible people. What better fit that you have? But it's got to start with a regulatory framework. That's the chain of command in terms of reaching a success of capturing that trillions of dollars that's needed over the next few decades to finance these kind of projects in Central Asia, Kazakhstan, and other parts of the world.
Yeah, of course. And so it's not enough to know what we want, in this case, sustainability being our goal, but also we need to know how to execute it via regulations.
Exactly.
So that's the point, the main point here.
They have to be common to all, not be catering to any one particular country or specific group, because it's a common cause that we all have to strive to achieve long term. A better planet for our generation, as you said.
Yeah, of course. And could you give us some examples of great regulations maybe we should to look after, for example, as a country or as a international financial center here?
Mm-hmm. Well, one I alluded to, central bank regulations could ease the capital requirements for, say, a development bank or any commercial bank here in Kazakhstan or anywhere else. Change the rules to reduce the capital requirements for those lenders that are involved in co-financing. For a riskier customer in one place a manufacturing company, bank has to maintain certain tier capital. But for co-financing, which is a multilateral, AAA rated, EBRD and others, AIIB, it's co-financing, they could lower the capital requirement. That will help the bank release more liquidity for other projects. Okay, that's one. Second, regulations or government can come up with provide incentives for carbon emissions neutrality. If they have certain reduction, they get carbon credits. And carbon credits can be sold to the government. Or carbon credits can be used to lower their tax rates for those kinds of achievements. Those are milestones, and those incentives can be used to stimulate these lenders and these companies to achieve that sustainable finance, and that attracts more and more investments. Take Europe, for example. In last November, came out with a regulation that all imports coming into Europe must achieve certain standards for carbon neutrality. And that led to other countries who were shipping goods to exports to those countries in textiles or whatever, led to a $3 billion increase in shipping costs. Because ships coming into that market had to be also adapting these standards. So there's a cost involved. And the cost involved for the globe is, as I said, trillions of dollars. In one province in China alone, as I mentioned, is $2 trillion. And there's a multiple of that for the world. Some studies on McKinsey have come up with studies that over a period of time, $50 trillion will be needed. Nobody knows for sure, but it may be higher. So, but that can be achieved, that transition gap, transition finance, by getting all these liquidity managers together, the one I mentioned earlier, the co-financing, the asset managers, and the investor base themselves, private sector. You talk about private sector, public-private partnerships. That is fine, but it doesn't work because private sector is risk averse. And they don't trust the public sector, perhaps, or they don't have that appetite. But this alleviates that risk averseness that they have by giving risk mitigants by getting co-financing.
Yeah, I see.
So these are the incentives that I would recommend.
Oh, yeah. Thank you very much for sharing such in extensive way. This question is related to the points you made earlier. Maybe you could add more of your opinions. How can private sector players and the financial institutions in Central Asia contribute to the growth of sustainable finance?
Well, I pointed out some of the incentives. Private sector, wealthy individuals want to achieve higher returns wherever they are, certainly above the inflation rate. As I mentioned, the interest rates are going to be coming down. And they're going to be coming down in the coming months, and they'll remain low for the time being because there's an element of disinflation that's coming into the world after high inflation. And this is a cycle. So high interest rates, people have been happy with investing in certain instruments, but they're not good for manufacturing companies. So as interest rates come down, the cost of production is going to come down. So it's good for these companies. Now, for the private sector, I would encourage them to make use of the carbon credits that would be available. That can benefit them. Secondly, look at those regulations that allow them to get lower cost financing because subsidies are available in some countries with some central banks or regulations. So they could be subsidizing those particular loans, cost of those loans. If they're borrowing at, say, 10%, maybe there'll be a subsidy of a couple of percentage points if they comply with those standards. That's another opportunity. They lower their cost of production. They get those subsidies. That's what everybody wants. And carbon credits on top of it. So these are incentives for the private sector in Kazakhstan to capitalize on. And I think Kazakhstan is leading, one of the leading economies in Central Asian republics that is encouraging this. AIFC represents that. I met with the chairman of AIFC yesterday and had a very good meeting. They're all supporting this effort. And the governor as well. So given what I mentioned, 90% of the energy that is currently by fossil fuels not by alternative energy, that represents a great opportunity for those people who are interested in the private sector energy area, because that's going to be huge. And automobiles, air, you've got electric vehicles that are coming out in very, very rapid form. And you could look at auto manufacturers to shift gears over there. So other sectors have the same kind of opportunities. The ones I mentioned, subsidies and financing, carbon credits. And that's where they could benefit from, especially given it's a low interest rate environment that we're going to be facing in the coming years. That's what I would recommend to manufacturing companies to look into that. Don't delay it, because the first come, first serve is the kind of opportunity that people will capitalize on. And private sector always moves quickly. Public sector is always slow. So that's why the private sector needs to get on top of it. And I think they're pretty smart. They do a pretty good job, as long as there's an enabling environment from a regulatory point of view, which I'd mentioned earlier.
Yeah, we are back anyway to regulations,
exactly.
Which shall be set up.
It's a circle. And you get that one stop opened up, you get that circle completed very quickly.
Yeah. Mr. Anwar, thank you very much for being here today and answering to all the questions. It was such an educational interview for us.